Hello there, Maverick traders. It is September 19th. We have one more day until September monthly options exercision is over, and then we're going to close the books, do payouts, and then look forward to the next month. So let's go ahead and get into it. In this session, we're going to go through what happened for the day, some of the news. We're going to take a look at the markets, some of the sectors, and then I've got 3 trades for you, 1 bull, 1 bear, and 1 sideways.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
Well, today brought some big news. We just hit a new all-time high on the S&P. The Dow hit it yesterday, but today the S&P was the one that got it. And this came after yesterday when the FOMC came out with the 50 basis point cut. And initially the market was excited, but then it really just sold off and ended up closing on its lows. So when you took a look at the US close yesterday, it looked a little shaky. However, the overseas markets all rallied quite nicely here. Look at the Japanese market, rallied quite a bit. The Hong Kong market rallied quite a bit. Here is the world ETF, the VT. It closed at a new all-time high. So look, it didn't look great after the close yesterday, but the overseas markets, everyone is very, very happy about this rate cut. So here we have stocks off to the races. If we take a look at the numbers here, the Dow is up 1.26%, S&P 1.7%, the Q's 2.5%, and you can see even the Russell that has been a laggard, it was fully participating as well. Up days across the board, oil and gold both up, gold trading at all-time highs as well. And if we take a look at the market internals, it was a solid green day. That wasn't just the large cap tech. Even though the large cap tech did great today, the whole market did really solid. Again, for every 1 stock that went down, we had 4 going up. So again, really solid numbers here. And you can see we are starting to get to some pretty good bullish numbers on the 50 MA. Now look, we are getting into the pretty bullish territory now with this number. It doesn't mean that you should start to panic, but we have to recognize that we've had a significant run. Let's take a look at these charts because you're going to see this is just a clear breakout. And we had these 2 candles, and I said, look, 1 more red candle, then I think it's going to be a problem. You can see we got a breakout. And in the end of the day, it was a green candle, meaning even with the 2% gap up, people were still there to buy. Now the S&P is at all-time highs, but the Qs are not. They're still quite a bit of ways, and I think it's going to take a while for these to recover. They got that really massive hit back in July, and they're still working their way out of it. But you can see we have not quite broken out of this resistance level here. So for me, the Qs probably break out a little bit more, but not to all-time highs, at least for a while. Here's the heat map. You can see the only place where there is any red whatsoever is in the defensive sectors. Consumer defensive was red. Utilities, red. Real estate, red. So these were the sectors that have held up the best. They actually did take a little bit of a beating today as the rest of the market participated across the board. So what does that give us at this market score? Well, we are above the 20, we're above the 50, but the slope of those lines, look, if someone said, Rob, this is a +3, I think that 50 is sloping up enough. Okay, +2, +3, it doesn't really matter. It's telling you that you better be leaning to the bullish side. Now look, I know this market has been up and down over the past couple months, and we always get periods of time like this where we see, again, we were at +2, +3, and then at one point we're at -2, and then we were back to +1, +2, and then we were doing -1. Look, these periods happen. We don't just trend, uptrend or downtrend all the time. We get these choppy periods, but I think we're moving into a nicer trend here to where, look, we may not have as big of a gains as we've seen over the past couple months, but I think it's going to be a little bit more steady into the election. Let's take a look at some possible trades. I got to admit, I did not find as many bullish trades as I thought I would. There were basically two kinds of stock charts I saw. Ones that had broken out and had a big run and I didn't want to chase them, and then ones that didn't break out at all and hadn't moved. Those are not the best setups. I used to do this as a young trader. When the market broke out and ran, I'd look at all the stuff that was super strong, and then I said, no, I'm not going to buy that. I'm going to buy the stuff that isn't strong yet, because I'm sure it'll get some strength. Well, they ended up languishing, and the ones that were strong continued to get stronger. But at some point, you can't just buy something after it's had a huge run. You've got to use some common sense entries. So I was not able to find a ton of possible trades, and the best one I came across was Meta. Now, this is Facebook. Look, I am no Facebook fan. I don't like Facebook. I don't use it. Again, look, I'm not going to go off on my personal opinion of Facebook. But I always use these kind of stories because in the beginning of my trading career, if there was a company I did not like, I could never go long the company. I could only go short. And if there was a company I loved their product, I loved everything about them, I could never go short. I could only go long. Well, I learned that it doesn't matter. I can still dislike Facebook the same amount and take a trade on the long side. And in fact, if any of you are struggling with that kind of bias, I recommend you take a trade in a stock you hate just to break that bias. Now look, not just take a random trade, wait for it till it's a good setup. But once you do that a couple times, you start to disconnect. Hey, this is just a trade. This is just a ticker symbol. I'm just trying to make some money because it's a clear breakout to the upside. And that's exactly what it was today. Stock closed right around 560. So look, we might have some backing and filling in here. I really like the 550, 560, the bull call spread. Now that's going to cost you about $6, maybe $6.50. So you're not going to have greater than 1-to-1 risk reward. But if this thing just hangs out up here, it's great. If it goes up, you make money as well. If you want, you can wait for a pullback. We might get one, but I think this one is ready to go. So this is Meta on the long side. This is the best trade I found out there as I was looking. On the sideways, this is DBX, Dropbox. And I'm looking at this. Now look, we usually like to see moving averages that have flattened out. And you can see we've got a little bit of steepness here on moving averages. What I did like is the rest of the market broke out to new highs. And you can see these last three candles were pretty serious red candles where we gapped up and fell down. That's telling me that this resistance is very likely to hold. So looking at this pattern here, I like this 25 as the upper point. So I'm going to go for a 23, 24, 25. So it's going to be slightly bearish, but more neutral if anything. And I'm going to go out probably 2 weeks on this. I think this is a decent trade here for it to stay in this range and not break out above that 25. And lastly, on the short side, I wasn't going to show a short today because I thought the market looks pretty bullish. But this one is just beautiful. This is Moderna. This has been on my short list forever. And you can see a little bear rally here from 64 up to 72. And you can see the selling came in on a day like today when the market was hitting an all-time high. Look at that candle. I mean, it gapped up and there was nothing but selling. And then at the very close, they were still selling it. The only reason this candle wasn't larger was because they closed the market. This is a really nasty candle here. So let's talk about potential targets here. Let's draw this quick little trend line. 60 is a pretty aggressive target on this one. I'm definitely not going to 60, but I like this 65. So I'm going to use the 65.70. That's going to be my spread. And that's going to get me a nice credit, probably about a $2.75 or a $3 credit on a $5 spread. So again, a 3-to-2 risk-reward ratio on this one. Tomorrow is a Friday. It is monthly options expiration. What we've seen in the past is we typically get the volatility Wednesday and Thursday on these monthly options expiration. This one is also a quad witching. And what I've really seen is in quad witching, we really get the volatility Wednesday, Thursday, and then the European style options they're going to expire at the open tomorrow. And then after that, it kind of dies down. So I think tomorrow is going to be a very dull day for anyone who's looking to day trade. I think it's a dull day. I don't think it's a great day for day trading. I do think that there's going to be a little bit more buying come in the market. I don't see any reason at all for anyone to sell here. I just don't see any reason that someone would say tomorrow, well, I'm going to sell tomorrow. Doesn't make a lot of sense. There are no economic reports, no earnings reports. We did get FedEx after the bell, and you can see it's down $30 after the bell. So look, this might affect some of the transports tomorrow, but I don't think it's going to affect the market all that much. That is the market roundup. Thank you for joining me. Goodbye, everybody.